My name is Jose Vizquerra. I am President and CEO for OIII Mining. We are listed in the Toronto Stock Exchange under OIII and in the United States under OIIF. We are a development company with 2.3 million ounces in Quebec, with already a preliminary economic assessment with $423 million at $1,450 per ounce, with a market cap of around $130 million. Thank you.
Jose, good to see you here. Thanks. You're in London, but well, you're not in London.
We're alive. We're alive.
We made it. The market's not that bad. We're alive. Yeah, but you're also bouncing around Europe. You've been Austria, Spain. You go off to Germany next, and here. Doing what? Who are you talking to?
Well, we have been doing marketing. In the moments, we have learned that in moments when the markets are destroyed are the precise moment where you have to talk about what you are doing.
Yeah.
So we have been talking to different people from the real estate business. We are now in the one-to-one conference. We're going then to Madrid to talk to infrastructure people, which is a place where there's still money, and then back into Frankfurt for another mining conference. Right. So I believe that this is the moment to start talking about our industry and what we do, because this is a precise moment where you can make sure that people can make money. Yep. And if they can make money, they'll continue supporting you for much longer.
No, I agree with that. I first learned that when I was working for a Japanese company. They said, the time to spend and market is in the time of a recession, because when it ends, you'll be the only man standing. Yeah. It's a philosophy from them, which worked out to be true for them, as their competition struggled. Let's talk about the market at the moment. Obviously, divergence between metal prices, gold, equity prices at the moment. It makes things difficult unless you've got cash.
Absolutely. And I think that explains what has happened now. As soon as the crisis has begun, people were either having margin calls or were deciding that they prefer to have the money in cash. So assuming that this was not the bottom, that they could take a better win by waiting and then buying it again. I'm not an expert, so I don't know if this is the bottom, if there is another bottom, but certainly it's a moment of uncertainty. And whomever has cash will be able to take advantage of the next wave.
Right.
That's precisely.
And we're talking in the context of investors trying to work out what the bottom is, and you're brave or super intelligent person to be able to do that. Same applies for companies, doesn't it? If you're sitting on cash, you've got some options in front of you.
Well, absolutely. This is a moment to be calm, first of all. Mm-hmm. Second of all, to be very strategic on analyzing what are the different options that we have.
Right.
And thirdly, it allows you to move thoughtfully. Because when you don't have cash, then you get all distracted, and you have to do something, and then you have to go and and take debt in a moment that you should not take debt. I think we have been demonstrating to our investors that we have been doing precisely what we told them from the very, very beginning. Mm-hmm. We were going to divest properties and put them into the right places. Yeah. Meanwhile, we were going to be advancing our own projects and being very disciplined with our cash. And we have been doing that. This is the moment where we have not to get crazy on putting very big, large programs, but rather to relocate them in areas where we generate the most amount of fundamental value. Waiting until the market turns around, do what we told everyone, get our pre-fees ready, unless, of course, any other strategic situation happens. But as of right now, is to get the pre-feasibility ready by September. Meanwhile, we were able to divest one of our properties to Cartier. Agnico Eagle has put the stamp, I believe, in my world, in my read, of I believe in this project, putting the pro rata into the.
Let's talk about that, because you've done I've read about a divestment there. You also made an acquisition. So let's talk about the Cartier deal, right? As you say, Agnico was a meaningful shareholder and has followed the money, and they continue to be a meaningful shareholder. Why would they do that, and why have you done that deal?
Well, the deal was very simple. Cartier had 2 million ounces in a very restricted area, and we had all the areas surrounding.
Yeah.
So we had two options: either be a pain in the head for them and say, "Listen, eventually you have to come and buy this," or we can be just kind of facilitating this, understanding that our property with their property is worth more, so it's 1 + 1 = 3, rather than thinking too much on what is the perfect deal. Okay, there is never perfect deals, but this property now altogether will allow Cartier to show that they don't have 2 million ounces, but maybe that they have 5 million ounces. By that, we have now a position there, which is a very meaningful position.
So what are you? You're sort of just under 20%. Of that now, so of that 2 million ounces and whatever they grow that to be. So that was that cash shares? There, what was the construction of that?
Only cash.
Right. Okay.
Sorry, only shares.
Only shares. Right. Okay. Agnico Eagle is the kind of big 800-pound gorilla in the district. They have needs soon. Well, in the next few years, right? That affects not just the Cartier deal, but also your projects, right? So does that allow you to get closer to Agnico in some way by doing this Cartier deal? Was that the thinking, or was it just about, no, let's look at the asset, we think there's some of the parts?
Well, I think we have to go on that in a very methodical way. So who is Agnico for shareholders? And I'm sure they already know you're the people that view you. But Agnico is the most important right now gold company, or one of the top 5 in the world. But on top of that, they have always been nurturing in Quebec. And they've been very open on saying that their focus is in stable jurisdictions, one of them being Canada. And the amount of work that they have been putting into doing deals and exploration in Canada is meaningful. In every single conversation, Agnico keeps talking about Canada. And we were actually very surprised that Agnico was not doing much in Val-d'Or, an area where they invested only maybe 10 years ago, over $2 billion to buy the Canadian Malartic mine. An area where they have invested hundreds of millions of dollars in their East Gold deposit, where they have been extremely successful finding over 14 million ounces. And an area where they control everything right now, minus 3 things: Cartier, Probe, and OIII mine.
Okay. Strategic. Right, okay. So you're on their radar.
Everyone is on their radar.
Right? And so I'm just intrigued by this, because it's like, if we kind of lay things out in terms of what you've got today, you plus what you have into 20% of whatever Cartier has or ends up with. You've also got investments elsewhere, haven't you, where you have meaningful stakes?
Yes, we sold our Ontario property to a company called Moneta Gold.
Yeah, they're doing quite well.
They did very well. I mean, that was precisely the idea. We knew that our property was bounded by Moneta. We knew that the mineralization went to their side. We never drilled to show them that. But we convinced them that we should put them all together. And then we took 30% of that company called Moneta. Moneta has drilled. When we started, we had 5 million ounces. They have recently put out a press release with their new resource. They have 10 million ounces now.
Wow.
And now we have 30% of that. We sold that at, I think, it was 40-something million dollars.
You've got 3 million ounces there. You've got 400,000 ounces at Cartier. Plus you've got your own, where are you, 2.3.
But that is only measured and indicated. That is like the highest category. That's pre-fees level. No?
Okay, it's starting to add up here. Whether you look at it in ounces terms or cash terms, what are they? About 230 million? Did you say?
We sold to Moneta for 40 million, and right now it's worth around 65.
Oh, your 40 was 65. Okay. Okay, so whatever way you look at it, but isn't that kind of like the problem for people to understand? Is like you've got all of these moving parts, right? In terms of whether it's cash or equities here sitting on the side, which I'm not even sure you're getting value for.
No.
Quite frankly, your asset is.
Well, it's one or the other, no?
Well,
either I'm getting a value only for the assets and the cash. And that's why I'm worth $130 million, because we have $100 million in cash and equivalents, which are the shares.
Yeah.
And we're worth 130. Or they're actually valuing me for Marban, saying, okay, Marban is worth $130 million based on your 2.3 million ounces.
Yeah.
Your cash and your equivalents, I assume that because you're an exploration company, you're going to be spending money, therefore that money doesn't exist.
That's why I framed it like that, because they assume you're going to spend it. So in the case of whether or not you can create accretive growth with that, is $1 worth $1 or $0, or is it worth $5? That's what they're trying to figure out.
But I think the important thing to understand here is that once you have the pre-fees, that should get out of the equation. Why do I say that? Because once you have the pre-fees, you need a bridge to the fees, which is $10-15 million. You can even get a private equity to give you that, and to get them involved in the development of the project. At that moment, is game over for anyone that wants to do anything to you, if they want to take over you, because then you have other opportunities. So for us, like, if looking to our investors, like, there is no better moment in terms of minimizing the risk and maximizing the value than right now moving from the PEA to the pre-fees, because once the pre-fees is done, like you have it pretty much sorted out.
Right, but most people go through the pre-fees stage, and that pretty much confirms the numbers they put out in the PEA.
Yeah.
Would you be happy doing that? It's just, we're going to confirm with a little bit more certainty, the PEA was broadly correct. Or would you say we need to kind of step up with the drilling between now and then, get that into the pre-fees, increase the scale of what we have, what we control, not what we own elsewhere, what other people are working on. What do you hope to be able to present to the market with the pre-fees in terms of moving the story and evolving the thinking?
There's a couple of things that we have to understand from the PEA to the pre-fees.
Yeah.
The first thing to understand that the PEA is always a 50-50. And it's a 50-50 even on the engineer side. I mean, am I really sure? No, 50%. 50% is enough to go with the value. So things change quite a bit when you go to a pre-fees. The first change is the resource. If you cannot do a pre-fees without having everything in measure and indicated. We didn't have much, but we have converted everything now to measure and indicated. Now we have 2.3 million ounces there. The next part is what price of gold you used at PEA, whether you're using the pre-fees. It may work in your favor, may not work in your favor. In our case, we use $1,450 per ounce. Now we're going to be using $1,600 per ounce.
Okay.
That hedges, in a sense, what has happened in terms of inflation. Some of the costs that we had in here are going to be much higher here. Now, we've also learned some things from our competitors. We decided to do a PEA showing the least amount of investment to have the most amount of IRR. That was the metrics. We were not focusing much on the amount of ounces we were going to produce.
Right.
After seeing what happened in the market, only the companies that have shown over 150,000 ounces per year has been gotten the award, put it that way, or has been treated better. So what I'm going to do, we are going to do, because it's always a team, we're going to work on how can we get into 150,000. If that means that we have a higher capex, set if that means that our IR is a little bit less, but as long as we can maintain the net present value, then we're going to be okay. Because now we're showing what the market wants to see. Maybe they don't care much about the other things, and we move more on that direction, because then we're showing that this is a much larger project, that it has the scale to be even brought to the next stage, meaning by that we can move from 150 to 200 if that comes as an opportunity. And more importantly, I think that on top of that, what we need to continue to do is to show our investors that Marban is not a restricted project by any chance. But although Marban has been drilled extensively, there is plenty of opportunities for exploration at Marban. The first one and the most obvious one is at depth. We were, because we are very diligent and disciplined with our cash, we didn't want to get crazy and just go and drill at depth. We were drilling a little bit just to show that it exists, but not to go for resource. But of course, that doesn't pay immediately. It will pay us in time. If we go and start drilling at depth, we'll start coming up with ounces very fast.
It's interesting that the market is now moving away from that. It used to be that 100,000 ounce a year producer was, you've made it.
Yeah.
We're now being noted. 150, I agree with you. I'm glad you said that, because that's what we're seeing out there. Because the big guys are looking for real projects with real scale to make a difference. You're sitting on a big land package, and yeah, you're right. There's lots of opportunity there. But if I come back to what the retail market needs to see, right? Because it's a difficult time, a difficult narrative, and people are hoarding cash because they want to, as you say, work out, well, how do they play this market? As far as the retail market concerned, do you think that your PFS is going to be enough to move the dial for them, or are you talking to industry? Are you talking to institutions? Do you know what I mean? You've got to get the balance right.
You know what? At the very end, I think that when a project is good enough in the different areas, it hits all of them at the same time.
Okay.
If you have a great discovery, it doesn't matter if you're retail, if you are a corporate, or if you are a big fund, you're going to buy it.
Yeah.
We have seen that with Osisko mining. We have seen that with Great Bear. We have seen that with many companies. So I think if we can show the market that we could be producing 150,000 ounces, that we could be getting a net present value very close to what was a PEA, because the problem with the PEAs is that, some PEAs come from PEA to pre-fees at half. As long as you go within the ranges, well, it may be a little bit less. I don't know.
Right.
But as long as we can show the 150,000 ounces and show that these projects, let's play numbers. We have right now $423 million PEA. Our market cap is $130 million. If I end up with a PEA that is 350, it doesn't matter. It's 3 times where we are today.
Mm-hmm. Okay.
And on top of that, to me, the most important thing is not that. The market needs to understand that Marban is not 3 million ounces, it's 5. And then it's 10. And that is the part that we need to keep working on. And that's the difficult part now, because when the markets are very low, you cannot be so aggressive with the exploration. We have to find that toning on that.
Exactly, because there's a little bit, the market is holding a little bit of cash back. Do you as an organization do that? Because here's one of the big problems I think retail have had with this story, and similar stories, big stories, where it's 2026, it's so far away, can't compute, I need instant gratification, I need it now. You haven't been able to deliver that, but here we are halfway through 2022.
Yeah, time is flying.
Right.
I've been saying this since 2020, and
but it's a bit easier.
We're in 2022.
It's easier to understand now, halfway through 2022, than it would have been in 2020, right?
Yes.
So I think there's a little bit of that in the mix there. So if we just take a look at the cash in terms of that point of do you spend quicker? Do you just stick to the plan? Do you perhaps just do things a little bit different? Because you've been offloading a couple of things, buying a couple of things, you're sort of tidying up the land packages and the partnerships. What has your approach changed at all because of what's happened this year?
A little bit. I think not in general, because our focus has always been divest what's not working, focus in Marban, and let's make sure that we show a discovery. Mm-hmm. In that sense, we were doing a very big program of 150,000 meters where pretty much half was going to Marban, half was going to our other property, Alpha. Mm. With this situation, what am I going to do? Keep trying to have a discovery at Alpha, or move everything into Marban and the surroundings, making that project the one that will show from 3 million ounces to 5, maybe to 10, leaving aside the fact that you could have a discovery. Well, I have given the time to our team to find a discovery for 2 years. we've been able to find here and there, but nothing really major. So now everything goes back to Marban, and that's a way to focus in where we believe we could add the most amount of value and adding fundamental value.
Is one of the options on the table with the cash that you got or equities that you could dispose of? Is the smart thing to, one, obviously, well, you could choose whether you want to sell equities in this market, but with the cash you got available, a lot of cash-strapped companies, a lot of opportunities out there to do a job for Agnico Eagle in the way that you wrap up the district. If this is precious to them, it's difficult for them to operate sort of down at lower levels, but create a sort of portfolio of your own to make yourself more attractive for possible future investment.
Well, I think we already did. If you remember, if you remember about that, in the case of Alexandria, it was a property that Agnico was interested.
Yeah.
And we not only bought it, but we have invested quite a substantial amount of money.
Yeah.
So, I mean, that is something that was of interest, that I'm sure was of interest for them. We bought Harricana, which was in the middle, where there is the Osisko mine around it as well. And then we recently bought another property. So we're always into this mode of buying things that are part of the main trend. With the case of Cartier, although it was a very good acquisition, which we did it from Chalice, we do believe that under Cartier makes more sense than under us. But we will continue like that. If tomorrow we have the opportunity to buy something else, we will.
You've got a board seat or two board seats at Cartier now?
One
board seat. Okay, right. Okay, so you know what's going on there.
Yeah.
Okay, interesting. Okay,
but regardless, like even if I didn't have any board seats, I mean, I think we have built a relationship with Philippe Potier that it is it's a relationship of trust, which really I don't need it to have a board seat.
Yeah.
Was actually more proposed by them, saying, hey, maybe Mirza can help us on environment and sustainability. Like, we believe that she's someone that can add value here.
Yeah.
And I'm like, yeah, sure, you want to have her. I'm happy to.
Yeah, I thought we spoke to her actually. That was a good conversation. I mean, really big conversation, and we've had a few since, because we get a little pushback on ESG by retail. Like, they're unsure of it. It's a cost. It's a distraction. It takes too much time, and all of those sorts of things. And we've spoken to CEOs of very large companies, and they're saying you don't get anywhere if you don't do those things. I think it was specifically to do with some large copper companies who said we couldn't operate in the country if we didn't do this. So, no, I enjoyed that conversation. So, and just sticking on the Cartier thing, obviously, good team, good CEO, Philippe Cartier, good guy, know what they're doing. Is there going to be more swapping of information between the sort of the management teams of both companies in terms of just trying to work out what's going on?
But we remember we do it all the time, and maybe it is because we are in a large district and people forget about things of the history. But I mean, we have pretty much bi-monthly meetings with Probe, because we have a joint venture with Probe.
Yeah.
We have the Sleepy Project, where we still have like, I think it's 45% or 40% of the asset that keep finding ore. Like, we have 40% of that.
Yeah.
And that's in the same.
Right. That's what I mean. So technically,
and then we have Cartier, with whom we are meeting constantly. Inside our own asset in Alpha, we have Golden Valley, which has just been sold to another royalty company, and we meet with them also very, very, very frequent. Not very frequent, but we keep in touch and we communicate.
Right. I want to talk about we come back to the market, sort of, in the sense that the technology space has seen a lot of investors get, badly burnt from sort of November of last year. The tech space has seen, a lot of damage done. I think that obviously Bitcoin is hurting a little bit at the moment, down 50% or so, and cryptocurrencies more broadly. People are realizing perhaps it's not all it's been made out to be or painted to be. How does a company like you go and attract people like that, given they don't understand the vocabulary or the words that you use, or what indeed the opportunity is? How do you explain that to that audience? So if I said, right now I've got 10,000 people who've just joined us from the tech space, trying to work out where to place their money, I mean, what's important for them to know?
I think the easiest way to explain where we are is that you have an asset that is worth right now, at the very least, 3 times what it's worth. And if you believe in Warren Buffett, he always says, buy something. Well, you have a PA, you will have a pre-fees, and you will have a fees, but the important thing is how much it's worth and at what price are you going to pay it. Mm-hmm. So that's what you always want to do. So if someone tells me, but what, should I buy you or should I buy this tech stock? Because I would tell them, well, do you want to have a 3x or you want to have a 20x? If you want to have a 100x, I'm not 100x. Now, what is your risk here? Yeah, I'm telling you, here you have risk of pretty much 0, because we have $100 million in cash. And you have the opportunity within a year of being 3x, within 2 years of being 5x. Very simple, you buy, you wait. If you're not disciplined and you sell, you lose.
I think that's the story of the moment, quite frankly. Good to see you again. Great to hear the story progressing and how you're piecing it together. It's really fascinating.